If you think about Goldman's call here after years of bullishness, how drastic is it and how global is it in nature, given that the demand issues are really spurring from China, but impacting really now companies around the world?
They, I think, are just pointing out the obvious. A lot of copper traders have figured out a little while ago, and I think copper is just following what you're seeing happening in China. The data this weekend was horrible, but it's been the trend. The question is what stops that trend. PMIs are weaker, the housing market's a problem. Every day I type on the Bloomberg terminal BI China and NI China. It kicks into my macro theme that China is just a rapidly advancing emerging market that's reverting, and copper's right in there. So you mentioned copper. People look at it in tons. I like it in the per pound price because you can overlay it with bond yields and it tells you where things are going. So right now, the 10-year note yield in China, the CGB, is 2.15%. The 10-year note yield in the US is 3.85%. Copper is bouncing on $4 support. On the same scale, copper should probably go to 3.
You know, it's not just China, right? We don't have a lot of housing starts here in the US as well, Mike. And one of the concerns is materials costs. Now, if these costs come down, does that mean we can start, building more housing stock in the U.S.?
Oh, yes. All the costs are going down. Lumber's collapsed. Crude oil's collapsed from its peak. Corn has collapsed 50% from its peak. It's normally what happens in commodities. It's the number one force in commodities, Matt, is they go down because they went up too much, and now they're on the track going down. The question is where they stop. And we see what's happening in the stock market. The stock market basically has to stay up for these things not to continue lower. So I think we're in the process right now of seeking out those low-price cures. Copper's a little different because it's global macro, and China's in decline. But if you look at all the other commodities, crude oil is probably heading towards $40 a barrel. It's not profound. It's what it's done since 2008 to make lows. Natural gas has already done it in the U.S. It dropped below its cost of production. So the question is, how do we stop this? And basically, you need the Fed to cut really fast and soon and the stock market to stay up. Otherwise, the commodities can do what they normally do, get cheap.